Caroline Hyde. This is Bloomberg Technology. Coming up, a high-stakes meeting. Chinese President Xi Jinping arrives in Florida for a meeting with President Donald Trump. We'll examine the top tech issues between two of the world's largest economies. Plus, the executive team behind Hyperloop One tells us why Elon Musk's high-speed transit idea is more than just a pipe dream. And Crunchbase gets its own round of funding. We'll hear about the database of startups, entrepreneurs and investors and what it plans to use the latest funds for. But first, to our lead, President Xi Jinping has arrived to meet President Trump in his Mar-a-Lago resort in Florida. Highly anticipated event. Over the campaign, Trump, of course, blamed China for stealing American jobs. But the two countries remain very reliant on each other. Get this, nearly half of all the US computer and electronic products imports, they come from China. And US multinationals have more than $228 billion in Chinese investments at stake if a trade war did break out. For more on what's expected from the meeting, let's go to Remy Inocencio with Bloomberg News on Palm Beach, Florida. Not a very sunny Palm Beach, Remy, but what are the top issues for this summit?
Yeah, you know, Caroline, it strikes me as really interesting, I have to say, first off, that this billionaire businessman in President Donald Trump and a novice politician, as we know, is meeting someone quite the opposite, someone who is a very seasoned politician, but who's now pushing back against luxury in China. But what ties them, of course, is money, and that is what we must be talking about here. One of the big issues here is jobs. For example, Donald Trump on the campaign trail, as we've known over the past 3 or 4 months, has been saying that China has been stealing, that's a quote, of course, stealing American jobs and taking them over to China. Another interesting topic that we need to be talking about is currency manipulation. China, of course, has been trying to figure out where it stands in terms of the yuan against a basket of currencies and against the U.S. dollar. The U.S. and Donald Trump have said that it is potentially a currency manipulator. It hasn't gone so far as to that. But interestingly, former Treasury Secretary Jack Lew just weighed in on this earlier today on Bloomberg Television. Let's go and take a listen.
For the last year, China has been intervening to prevent the devaluation, to support the RMB. That makes it very challenging to look at the current situation and reach a conclusion that there is currency manipulation. Clearly, there is a transition underway from a very managed exchange rate to a more market-oriented exchange rate, but it's not a pure market-oriented exchange rate. Right now, the interventions are actually in the opposite direction from what you look at in terms of measuring manipulation.
So, Caroline, if anything, Mr. Liu is saying that China is actually strengthening the yuan as opposed to weakening it. Right now, it's been trading within a range of about 6.8 yuan to 6.9 yuan to the dollar ever since the start of this year. But one final topic that the two gentlemen will definitely be talking about is the U.S. trade deficit, or if you look at it from the China side, the Chinese trade surplus. In 2016, $347 billion was the amount of money that the U.S. saw in terms of its deficit. Donald Trump on the campaign trail again has been saying that that has been very, very unfair. Again, his words, according to the according to the American people, and he said that he's going to do something about it. So we're going to be looking at jobs, we're going to be looking at the currency, and we're going to be looking at trade, Caroline.
I want to dig into trade a little bit more. I got on my Bloomberg, my favorite function for the couple of days, ECTR. Remy, it is amazing just to show how much trade goes on between China and the US. Number one trading partners. China, what is it, 2/3 of $1 trillion is what the US imports from China. We're talking about how much of those goods are technology goods. Therefore, the tech world waits with bated breath. Any potential deal, do you think, to come from this two-day meeting?
Right. Well, in terms of technology issues, that'll be an interesting thing to see what happens when they start to have substantive talks on Friday here. But in terms of a couple of other things, one thing I'm looking at is aviation, because especially over the past few years when Donald Trump and past presidents have come in, they've talked about maybe potential deals with Boeing. And of course, that's based over in Washington State. And just a couple of years ago, they did sign a $1 billion deal there, saying that they could, in fact, bring a lot of Boeing planes over to China as that country does expand. Of course, we'll have to see if anything does come from that. A lot of analysts are saying that if Mr. Xi Jinping just tells Donald Trump or convinces him to not carry out on campaign rhetoric, for example, that 45% trade tariff or anything else, that would already be a win for China. So we're going to have to wait and see. But right now, just looking ahead to the next hour or so, Donald Trump, as well as Xi Jinping, as well as their wives, they're going to be sitting down to dinner. They're basically going to be saying, how are you? Get to know you. This is the first time, remember, that they're doing a face-to-face. And then tomorrow, they're going to get down and dirty with more substantive talks, Caroline.
Down and dirty, really. Remy Inocencio, thank you very much. From Palm Beach, live for us in Florida. Great to have you on the show. Now, our next guest says the diplomatic relationship between the President Xi and Trump is considered to be one of the most important in the world. And this will be the biggest test so far for the U.S. president. Lindsay Ford is a director at the Asia Society and joins us from Washington. Lindsay, thank you for your time today. And it still is amazing, the significance of the relationship. I'm going to the Bloomberg terminal. I'm looking at a particular graph at the moment that shows, if you type in G #BTV198 for the terminal users, US total trade in China, 17% of all world trade is coming from China. This is crucial. How worrying is it that Trump has talked so tough on trade?
I think what's interesting right now is that you heard very tough rhetoric coming out around trade during the campaign, but there does appear to be two different camps within the Trump administration right now. And I think that you have certain folks within the administration, in particular, his son-in-law, Jared Kushner, perhaps Secretary of State Rex Tillerson, who come from a business background and probably have a much more pragmatic, business-oriented approach, where they're interested in how can we create jobs, how can we build the economy, and they recognize that that involves doing trade and doing business with China. There is certainly a different camp. What you saw on the campaign trail, and folks like Peter Navarro, who, have been very clear that trade with China is unfair for America, it's ripping jobs away. And so I think what's going to be interesting to see, both coming out of this meeting and going forward, is the Trump administration able to find a middle ground? Are they veering more towards one or the other? And do they have a more coherent approach on what their economic and trade strategy is really going to be with regards to China?
I'm just going to give another go for our viewers to check in what the significance of the trade is between China and the US. As saying 17% is the reliance of the United States on China. You can get this on the Bloomberg, typing in G #BTV198. Lindsay, it also is amazing when you're thinking of certain technology industries. We've got to focus on that here on the Technology Show. State-backed chip industry is one that Wilbur Ross, the Commerce Secretary, has really commented he's worried about in China. But other non-tech industries are actually potentially set to benefit in this particular meeting. We've heard that maybe sweeteners on the autos and the agricultural front coming from Xi Jinping. Do you think there'll be concessions on both sides of the equation here? I'm not sure how much you're actually going to see real deliverables coming out of this meeting. I think more than anything, you're going to see both leaders really try to lay the foundation, set the baseline. They're going to make clear what their priorities are. They're going to say which particular industries and things they care about, where they'd like to see things done, and also, I think from the Trump administration, where they want to see China perhaps, set a more level playing field. So I think what they're really aiming for in this meeting is to lay a foundation, and we're actually going to see more concrete what comes out of that in the months ahead. As part of that foundation, we're understanding it was a Bloomberg scoop from our BNA colleagues at Bloomberg talking about the Asian Infrastructure Investment Bank, potentially an invitation for the United States to join that coming from China. Do you think that could benefit the relationship with the US with not only China, but also other key hubs in the area, particularly from our perspective, from a tech perspective, Singapore, Vietnam, Taiwan? What does that sort of look like?
Sure. Infrastructure is a huge priority in Asia right now. There are tremendous needs. And I think there's certainly a recognition that this president has talked a lot about his desire to see infrastructure investment in the United States. And so perhaps infrastructure is an area where, this administration can find common cause and common ground with governments in the region. I think there would be great interest, not just in China, but in other countries in the region as well, at looking at how can the United States play a greater role cooperatively on infrastructure. Whether or not that means the United States decides to join the AIIB, I think actually gets beyond simply the economic considerations into broader strategic issues as well. But I know there will certainly be an ask and a push on this, and I expect they'll consider it.
And Lindsay, of course, maybe the quid pro quo is you come into the AIIB and maybe tentatively, eventually, China might be able to invest more in even US infrastructure. I know that's a leap, but we're already seeing the Chinese money flow into startups in the United States. I'm thinking of Lyft, I'm thinking of Snap, who have taken money from Chinese companies. How important is the money flow between the US and China when it comes to investment, and how much is it at risk?
Yeah, I mean, it's tremendously important. When you talk about some of the startup industries, and tech investments and stuff, I think what's going to be interesting to watch in the coming months and years is that I think there will be in some camps in the United States a closer eye on these types of investments in industries that, some people in the United States consider sensitive, and where China is investing and what type of know-how that's giving them into U.S. technologies. So I think that's going to be a bit of a double-edged sword. On the one hand, there are companies who are definitely reaping the benefits of widespread Chinese investment and money that they can't get elsewhere. On the other hand, I think there will be greater sensitivity to where and how exactly the Chinese are investing.
Westinghouse comes springing to mind. Lindsay Ford, director at the Asia Institute. Wonderful to have you joining us today. Thank you. Now, to a stock we're watching for you. Twitter co-founder Evan Williams is selling some of his 5.5% stake in Twitter stock over the next year. Now, for explanation, Williams took to Medium, of course, the company he's helped with, and said, "It actually pains me to be selling at this point, but this sale is all about personal context, not company context." Shares of Twitter have been under pressure this year as the company continues to struggle with user growth. Up next, futuristic transit that zips through tunnels 3 times faster than high-speed rail at 2/3 of the cost. Hyperloop One gives us an update on, how it's aiming to bring Elon Musk's big idea to life in the US. This is Bloomberg. Hyperloop One is in Washington, hoping to win support from policymakers and perhaps some investors. Remember, this is one of 2 companies trying to turn Elon Musk's brainchild of a futuristic transit system 3 times as fast as high-speed rail into a reality. Earlier, Hyperloop One announced that it's finished installing the tube on its Nevada test track, a key step, it says, in proving the system actually works. The company also revealed 11 teams proposing routes across the United States. Hyperloop One CEO Rob Lloyd, who was once tipped to be Cisco CEO, spoke to us about his company's specific plans in the US.
Well, this is American-made technology, and obviously our reputation as innovating across so many categories of big transitions has been world-leading. But in the area of ground transportation, in the area of high-speed rail, there is no real American technology. So as a LA-based company that's grown from a garage and building towards 500 employees this year, 260 right now, in less than 27 months, we're demonstrating that we can really build something new, something different, by bringing the brightest minds together, providing them with the capital and tools required to make this happen. And the answer to your question is, we can do this in the United States if we collaborate with governments, if we work and support and get the support from regulators, so we can actually dovetail with existing transportation programs and write a few new rules for Hyperloop. And I think those 2 things are the conversations we're having here as well on Capitol Hill.
3 winners. What happens to those winners? Do those projects definitely start to break ground? You say you want to aim to have Hyperloop beginning to work and be a reality by 2021.
So we have 35 finalists, semifinalists, and 11 of those are from the United States that we've just launched here today. We're going to bring that down to about a dozen, and then really we have to do more work. We have to do detailed engineering studies. We have to really get to the next level of specific route analysis, the economic analysis, because we're doing this to actually transform economies, to drive economic growth and advantage. And there's a little bit more work to do with those 12 finalists, but then what we do want to do is when we find governments that are supportive, we're working with a route that actually makes good sense for us to build that first production system. We're going to try to help finance that. We're going to continue to deliver the value that our team is bringing in working together with regulators and governments, and obviously designing the technology to solve real-world transportation problems. So we are going to try, as we go to 12 finalists and then down to the final 3, pick a route that makes sense, pick a route that can be financed, and pick a route that can be built very quickly. That's going to get us to a system in production in 2020 to 2021, and we are very, very encouraged and hopeful that 1 or 2 of those could be right here in the U.S.
How close is the technology? Because also today you're announcing you're finishing the tube installation, but that's 500 meters. We're talking of lengths of routes of up to 1,000 miles here. How quickly can you prove the technology really does work?
Yeah, the company's guiding mission, the thing that's really created so much energy and excitement inside this young company, has been to build a full-scale prototype. We can talk about this forever and talk about the advantages of the technology, but we are near completion of a full-scale prototype. Although 500 meters, it combines all of the innovations that we've developed since the company was founded. Custom-designed electric propulsion system, a tube that allows us to remove most of the pressure and therefore resistance, the pods that will carry either cargo and people, the control system that allows us to actually manage very high-frequency pods. Now, we're going to accelerate really quickly and decelerate really quickly inside that 500 meters. That's not what you and I will experience as we move to a production-based system. But I'll be really transparent. This is a full-scale architectural system, and then taking that architecture, deploying it in a production environment is only the next step. So we're very excited that within the next couple of months, we're going to show the world that Hyperloop is real, and we're getting really close, and obviously we're pretty excited that that has been the single most important milestone for our company.
Can it be real in a highly populated area, such as, say, the Northeast Corridor?
Yeah, the beauty of Hyperloop is we require much less land. And whether we're above grade, perhaps on an expanded right-of-way, an expanded rail right-of-way, or beneath grade in a tunnel, because of the combination of factors in our architecture, by reducing pressure, you reduce the size of a tunnel that could come into a city center. So I'll be very transparent. We need less land. We can be 2/3 the cost of high-speed rail, 3 times as fast. And in our analysis and what we've been sharing today with experts from around the world, we can deliver 2 to 3 times the economic benefit of any other mode of transportation. That's on the efficiency of economy, the ability to create very large labor pools between different centers and major cities. So we can go in places that other modes of transportation find difficult, and the Northeast Corridor is one of those where I think Hyperloop will make sense, and we've got some work to do there.
Hyperloop One CEO Rob Lloyd there. And we also had a chance to catch up with the company's executive chairman and Sherpa Capital co-founder, Shervin Peshawar, and asked about, well, how this project is actually being funded.
Raised about $160 million in funding in our 2.5-year history of founding. So it's been, as we talk about this ability to kind of do moonshots and build something from an idea to now in the deserts of Nevada, a reality, is pretty spectacular. And we've got, great investors present and future who are going to be part of what we're building. So it's going quite well. We'll have more to say in the near future.
Such exciting projects as these sometimes aren't without controversy, Mr. Peshawar, and one of those controversies has been the lawsuits between you and the original co-founder, the original CTO. How has that dented the ability to raise money, if at all?
Yeah, no, we're going from strength to strength. We're 250 people, incredible talent. We're building this. Everything is looking really great. There hasn't been any slowdown in our progress to make the Hyperloop a reality.
That was venture capitalist and Hyperloop One executive chairman Shervin Peshawar there. Now, coming up, we'll hear from the man behind the eBay of Latin America, what the CEO of e-commerce giant Mercado Libre has to say about competing with Amazon. That's next. This is Bloomberg. In Buenos Aires, the World Economic Forum of Latin America is in full swing, with some of the country's biggest companies in attendance. E-commerce giant Mercado Libre was there and is trying to protect its market share from Amazon. Bloomberg caught up with CEO Marcos Galperin about his strategic priorities.
We have a huge opportunity in payments and financing. We believe we have created a very large platform in Latin America. Last year we had 28 million buyers and 8 million sellers. And financing creates velocity in the marketplace, so it's very synergistic with our business. We have started to experiment providing financing to the merchants in Argentina and Brazil, and we're doing really well.
Meanwhile, Spotify is planning on going public this year, but reportedly with a twist. According to the Wall Street Journal, the digital music company won't go to the traditional IPO route and is instead considering a direct listing. In this case, Spotify could simply register shares on a public exchange and let them trade freely. Spotify is targeting a $10 billion valuation. Shares could be listed as early as September. And the largest cable operator in the US is getting into the wireless business. Comcast is offering unlimited data on Verizon's network at a cheaper price than almost any other competitor, $45 a month. That's likely to escalate a price war in the mobile phone business. Coming up, Crunchbase, the database of startups and entrepreneurs, expands itself. We'll sit down with the CEO. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. China's Xi Jinping has arrived in Florida for talks today with President Trump at his Mar-a-Lago resort. The threat of North Korea's nuclear ambitions and tensions over trade are on the agenda for the first in-person meeting between the leaders of the world's two largest economies. The UN is strongly condemning North Korea's latest ballistic missile launch and demanding a stop to all missile tests that violate UN sanctions. A statement released today by the Council expresses concern at, quote, flagrant and provocative defiance of the Security Council. Russian security agents arrested 3 people today with suspected links to the suicide bomber accused in Monday's deadly subway attack. They also defused an explosive device in the same apartment where those suspects lived. In France, Conservative presidential candidate François Fillon is campaigning for tougher, more united Europe. Fillon warned that Frexit would lead to chaos and the demise of the EU. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. Thursday here in New York, already 7:30 Friday morning in Sydney. I'm joined by Bloomberg's Paul Allen. He has a look at the markets. Paul, good morning.
Good morning, Elisa. We're expecting the ASX to rise about 1/3 when we get to the open in about 2.5 hours' time here in Sydney. Nikkei futures looking mixed right now, but when trading in Japan gets underway, it'll be worth keeping an eye on the convenience store operator 7 & I. Out with some results overnight, forecasting operating profit to rise 6% to $3.5 billion in the coming financial year. And you'll also be seeing some more of 7 & I in the United States. It's going to buy Sunoco's shops and gas stations business in the US for $3.3 billion. So that is a stock to watch in Japan when trading gets underway. Also in Korea, keep a close eye on Samsung Electronics today. Preliminary revenue and operating profit for the first quarter is due out very soon. I'm keeping an eye on things right now. No lines dropping just yet. But also J.Y. Lee, the de facto head of Samsung, is due to appear in court today. That is in connection with the influence peddling scandal in South Korea that's already taken down former President Park Geun-hye. So that's just some of the stories to watch around the Asia Pacific today. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And let's get back to our lead. The meeting between President Trump and China's President Xi now underway. It will be the first real test of President Trump's promises to win negotiations with the world's second largest economy. Let's look at it from where Asia stands from a market perspective. Similar to the United States, Asian markets just capped off a strong first quarter, and a 20% jump in tech stocks has the MSCI China Index at its highest level in more than 6 years. For more context, let's bring in none other than Bloomberg News stocks reporter Abigail Doolittle in New York and break it all down for us from the Asia perspective.
Well, Caroline, it really has been a tremendous first quarter year-to-date performance for Chinese equities. We hop into the Bloomberg and we take a look at #BTV 7568. This chart really puts those gains that you just showed into perspective. Up top, we do have the MSCI China Index up 14% on the year. In orange, we have the S&P 500. So while we're having a good start to the year here in the U.S., up 5% relative to Chinese equities, up 14%. And the top sector here in the U.S., tech, helping to explain why the NASDAQ is up about 12% on the year, is the top sector for Chinese equities as well. We have all of the big names higher, including Tencent, Alibaba, NetEase, and Ctrip. Now, Tencent, all things Chinese internet. What's really driving the growth there and driving the gains on this year is the company's dominance in China's social networking market. Investors really want to get in on that. And then as relative to Alibaba, NetEase, Ctrip, all of these companies in their most recent quarters, Caroline, put up huge beats, double digits, many of them by 50% or more. NetEase, in fact, they are a $37 billion market cap company. They beat by 41%, Caroline, and that's not a small number either. They put up more than $28 in adjusted earnings for a quarter. So huge numbers, and it just seems that with the stocks up so much this year, most of those stocks on pace for their best year since 2015, investors want to get in on that growth.
A huge global trend, Abigail. And of course, those gains, particularly in Asia, could potentially come at a price. There's always the naysayers. And Mark Mobius, executive chairman of Templeton Emerging Markets Group, when he told Bloomberg TV earlier today, really, that China stocks are just a bit too expensive.
So, Caroline, this is very interesting. He did say that, and he also said that he would not be adding aggressively, which is different from selling those shares. Valuation is always a relative thing. It matters what metric you're looking at: price to earnings, price to sales, EV to revenue. When we hop into the Bloomberg and take a look at #BTV 7569, this is a chart of the trailing 12 month price to earning ratio on the Shanghai Composite, and it is at 19 times, so just a little bit higher than where we are at for the S&P 500 at about 18 times. But look at it relative to valuation of yesteryear, Caroline, back in the early 2000s, close to 60 times, and the average there of 27.6 times. So this actually suggests that Chinese equities could actually be cheaper, at least certainly below that average, relative to one of the biggest names that we talk about here in the U.S., or Alibaba, the e-commerce company, 75% of the overall online market in China. Now, this stock you would think would be expensive, considering that it's up more than 50% since the company IPO'd back in 2014. But let's take a look at another chart in the Bloomberg that suggests maybe there's more to go here. And this chart is #BTV 7570. Alibaba does have a rich price to earnings ratio of 53 times compared to the Shanghai Composite, compared to the S&P 500. But Caroline, 54% revenue growth, 160% earnings growth. So huge growth. And look at that, well below its average and well below the peaks over the last few years. So you could say that Alibaba, that maybe there's more room to go, especially with those strong fundamentals and that big growth potential, Caroline.
Fascinating reporting, as ever, from stocks reporter Abigail Doolittle. And we're going to be talking much more about a man who knows Alibaba intimately. Tech investors are, of course, watching the highly anticipated meeting between President Xi Jinping and President Trump. Their concerns: trade, tariffs, currency tightening. Major tech companies in the United States and China could be greatly impacted by any changes in the relationship between the two countries. Joining us now from Stanford is Hans Tung, managing partner at GGV. He has led investments in Xiaomi and Alibaba. Great to have you on the program. And we're just hearing about the real outperformance of Alibaba. It seems to be a phenomenal investment that you made, Hans. But how much do you think there is a worry about the breakdown in relations between the US and China? Are you worried?
I think a lot of people are watching what's happening this week for sure. But I think the general consensus is that both sides should be reasonably rational and work towards figuring out what is the right new relationship between the two great powers.
The right new relationship being what in your mind's eye, Hans? I'm thinking of some of the phenomenal relationships that already really have potentially gone unnoticed. We know that China is the #2 taker of H-1B visas, so we have a lot of tech talent coming from China. We're also seeing, of course, a lot of money going into US-based startups from China. I'm thinking Lyft, I'm thinking Snap even, which just IPO'd, but also going the other way. What sort of relationship would you like to see?
I think what we want to see is a sort of a situation of stability. What China's looking for is something that's non-confrontational, that's non-conflict, more mutual respect and collaboration of win-win between U.S. and China. So given that there is trade deficit, there's a variety of host issues, I think that China is very interested to work out a mechanism with President Trump to solve this issue. None of those will go away, but having stability serves everyone's interest well in the region.
Certainly, having stability between the US will help. Alibaba, one of the portfolio companies you had, well in the United States. How much baked in are you for Alibaba's future? Is the expectation they can build in the US and put online all these small entrepreneurs who sell into China?
I think that's one of the great things that China's reacting to President Trump's agenda. By allowing more imports will help to reduce trade deficit. Trade deficit roughly was around $350 billion last year, and as of February, the gap has narrowed tremendously. I think over the next few years, you will see more imports from U.S. going to China, enabling more SMBs from U.S. to do better in China. China is going through a period of consumption upgrade. You have 300 millennials increasingly becoming more globalized in views, in taste, in a way they consume. So it is a great opportunity for Alibaba to take advantage of, allowing more U.S. SMBs to do better in China.
What sort of goods are we talking here, Hans? Because I'm thinking the crackdown on luxury items, that's going to be hitting the likes of the French juggernauts that, of course, the LVMH spring to mind. But what sort of goods will be sold by small to medium enterprises here in the U.S. to China?
We're an investor, in addition, previously in Alibaba, also in a company called Xiaohongshu, Little Red Book. And what we're seeing on both these platforms is that you see a lot of apparel, fashion goods, that's more mass market price point, not luxury items selling well in China. You see beauty products, you see healthcare products, you see gadgets, electronics, variety of things are doing well in China that's originally designed in the U.S. They've been manufactured in China, but they were designed and branded in the U.S. before being sold into China.
Let's talk about another one of your key investments, Xiaomi, of course. This is a company that's seen a slowdown in its home market, Chinese smartphone maker, and really led the way in having very powerful smartphones at a very cheap price point. But it seems as though the competition's pretty hot at home, and they're looking at India and the like. Where do you see this company going?
Xiaomi on two fronts. One, they're doing extremely well in India. I think in the #2 and #3 India now. So initially, to buy a phone in India, you have to go online to buy Xiaomi. So it takes a while for Indians to have the internet access with the first smartphone coming from another brand before they will order a replacement phone from Xiaomi. So it just took a bit more time, but you're seeing fruits of that strategy working out in India. I think also in China, what Xiaomi is doing is expanding offline. Their new retail stores format has done extremely well for them. They have over 100 stores in China now, and they can understand that online commerce only goes so far. It's only 15% of total retail in China. So they already have enough market share online. They need to expand their offline presence. And the new store offer a very global look that appeals to the millennial consumers in China very well.
Many feeling it took a leaf out of Apple's book in so doing. Hans Tung, GGV Managing Partner, wonderful to get your expertise on the US-China relationship. Thank you very much indeed. Now, a big payday for Intel CEO Brian Krzanich. The company has boosted the chief executive's compensation package 30% to $19.1 million last year. The pay bump was fueled by a bigger stock award and costs for his personal security arrangements. Now, Intel's board awarded Krzanich stock worth $11.7 million, a 20% increase from 2015. Now, a feature we'd like to bring to your attention is our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews from our television coverage around the globe and dive into any of the securities or Bloomberg functions we talk about. This is for Bloomberg subscribers only. Check it out at TV Go. Add this to your function, to your launchpad, why don't you? This is Bloomberg. Crunchbase, the widely used database that charts startups, entrepreneurs and venture, just completed its own round of funding. The company raised $18 million and announced an expansion of its subscription service, which gives users insight into market trends. Here with us now is Crunchbase CEO Jagger McConnell. Wonderful to have you on the program with us. Congratulations, $18 million. Easy to come by?
Yeah, I mean, it was particularly easy to come by. I think that's unusual for typical Series B. We had a pretty good story. We had launched Crunchbase Pro late last year, and with that traction, we actually turned around and raised a pretty healthy Series B. So we're excited.
And the growth, therefore, talk us through it, because you've got a new enterprise product. It's a new sort of way, $99 per month. It's for bigger teams. It seems to be the way people are moving, is into team-based products now when it comes to enterprise.
That's exactly right. So with the Crunchbase Pro launch, which was more of a prosumer individual decision, we started seeing the traction of our customers saying, we'd love to have this across our entire team. We'd love to integrate this data into our own systems. So it became clear that we had to launch something called Crunchbase Enterprise, which facilitates that and allows for that to happen.
But next step, marketplace. I understand potentially you're going to be looking at becoming an even bigger platform using other data sources and the like. Can you give us a little bit of a flavor of that?
Of course. So our long-term vision is let's become the master record of companies on the internet. People go to LinkedIn for resumes and Amazon for products. If we can convince people to come to Crunchbase and find company information, that we feel that's a very valuable asset. When you think about how you would do that, it's very hard for a single company to go and acquire all the individual pieces of data about a company and put it into one spot. So we're leveraging the channel that we already have. We have 27 million users using us today. Let's go to data providers and say, are you willing to go and give us your data? Let us put it into our platform and let our users add it to their experience of using Crunchbase, and then sort of accommodate the use cases in a better way, in a way that's never been done before, which allows me to go and do searches for the sorts of companies that I care about based on how much website traffic they have, how much what web stack are they using, are they hiring, tons of really interesting ways of attacking different data from a company.
Now, what I think is fascinating is you're just saying your own money was rather easy to come by, and you must have such a bird's eye perspective of what sort of money is being raised in what regions or what sort of pace. I mean, Bloomberg itself has a US startup barometer, and I'm able to look on my Bloomberg right now, type in B Startup Go, and I can see that, relatively speaking, we're not looking bad when it comes to the health of startups, the VC money they're able to get, the exits that we're seeing. We're at 581. It's a lot better than it was back in 2012.
Yeah.
What are you seeing? What are you looking at in terms of geographical and ease of funds and the amount?
Sure. I mean, it's interesting. You were talking a lot about China today. Beijing is a good example. From 2015 to 2016, we saw 3 times as much funding go into Beijing, from $6 billion to $18 billion.
Wow.
Which is pretty amazing. And if you look at that same sort of barometer of Silicon Valley, you see about $25 billion in 2015 and then in 2016 it was about 23. So you're seeing a shift, and while Silicon Valley is certainly the hub of investors and investments and it's still the kingmaker right now, you can imagine that changing over time as these international markets are maturing.
What about the movement of capital from potentially Silicon Valley into Chinese startups and vice versa? Is that something that you track as to, of course, you can see where the money is coming from for each individual startup? And as I said, the likes of Snap and Lyft and Magic Leap all got money from China. What do you see there?
Yeah, that's exactly right. I think investors are becoming more accepting of investing outside of their geographic area. So you'll find more folks here investing in companies in China, and even European VCs investing in US, and it's becoming a true global venture market, which is both exciting, but it will be interesting to see how the power shifts in that sort of scenario.
And a very global platform that yours will become. Thank you very much indeed. It's been wonderful having you on. Jagger McConnell, CEO of Crunchbase, which just raised its own bit of cash. Now, coming up, the CEO of Tableau on his first 8 months at the helm of the software company, how he plans to take on the competition with a new bet on subscriptions. That's next. This is Bloomberg. Now, there's a major shift happening at Tableau. The data visualization company has announced that all of its software will be available as a subscription. The model aims to provide additional flexibility for customers who want to reduce upfront expenses. With us now is Adam Selipsky, Tableau President and Chief Executive Officer. He joins us for his first television interview since he was named CEO last year. So first of all, congratulations. It's about 8 months into the role, isn't it, Adam?
Just past 6 months, but it's flown by very fast. Yeah, very nice to be here.
Doesn't it just? And talk to me about the subscription-based model, because this is something we're seeing cloud-wide almost. Many a company have been making this shift. And de facto, you've been making it incrementally anyway. This is the formalization almost.
That's exactly right. We've really been selling our software more and more on a subscription basis over the past year or two. But today we announced that all of our products are available publicly via subscription. All of our partners who resell Tableau are able to participate and sell those subscription offerings. And we're really doing it because customers are pushing us there. It's better for them. It's better for customers, for the most part, to buy via subscription.
And it's better for stakeholders, shareholders, who then get more consistency in your numbers. Is that sort of something that also eases the transition?
Well, I think that'll be a byproduct of this move. We're really doing it because it is better for customers. There's much lower upfront expense, as they don't have to pay for the entire software all up front. They can just pay for a period of time. So there are cash benefits to that. It's essentially a risk reduction program for customers, as they can decide in any period of time what software they want to use. And we think that will, over time, create greater demand for Tableau. And we think that'll be good for the company and good for our stakeholders.
I mean, a lot of analysts are agreeing. I'm looking at a BMO report and saying this is a good strategic move. They say, interestingly, they're a little surprised at the length of the payback period versus a perpetual license. And they note that the data is still more expensive than Microsoft. Tell us about the competition and how you're pricing yourself and how the land lies.
Well, Tableau really was the pioneer and the innovator in this field of visual analytics. And because we got out to such an early start, and because we've really put a premium on innovating quickly, we have by far the most complete and most sophisticated platform for visual analytics. So we've seen time and time again with customers, with analyst reports, that we really have the best return on investment and have significantly higher ROI than really any other tool out there. So our customers continue to see the value and are accelerating their use of Tableau really rapidly.
Can you give us a sense of growth that's happening at the moment?
Sure. Well, last year we ended the year with 54,000 unique customer accounts, which was a growth of 15,000 just during 2016. We've talked a lot about our enterprise growth as well, and in the fourth quarter of 2016, the number of transactions we did that were over $100,000 grew over 40% from the prior year. So we're really seeing very strong momentum.
Trends continuing?
The trend is we're definitely seeing strong business growth, and we think the future is very bright.
Talk to us also about the trends that you're seeing in the individual business, in visualization, AI, machine learning. I mean, it's hot across the board, but it's also hot in data visualization. How are you looking to jump on that wave as well?
Well, that is definitely one of many product areas in which we're very busy working, and we're really trying to innovate. So I think that for Tableau, we're going to end up using very sophisticated machine learning and artificial intelligence under the covers in order to make things, ironically, even simpler for customers. So you can imagine in the future being able to ask Tableau with your voice or via your fingertips, what are the most expensive housing markets in my area? And then maybe ask a follow-up question of, how about the least expensive? And there's a lot of machine learning that needs to understand that second statement is relative to the first statement. We think over time there are going to be literally hundreds of millions of knowledge workers who are going to need tools and platforms like Tableau in order to do their daily jobs. much the way that it's played out with spreadsheets and word processing.
Yeah.
And we think that it's going to have to be presented to them very, very simply, and machine learning will be an important catalyst in that.
Adam Selipsky, great to have your time today. Tableau CEO, thank you for joining us. 6 months, just a little over, into the job. Now that does it for this edition of Bloomberg Technology. Remember, this Friday, it's Jobs Day in the USA. Gary Cohn, Director of the White House Economic Council, will be joining Bloomberg Daybreak Americas. Tune in, 9:30 UK, New York time. This is Bloomberg.